There is a man whose name sits on nearly $10 trillion, more money than the economies of Germany, Japan, and India combined would start to look nervous. But here's the strange part. He doesn't own it. He holds it. Your money, your neighbor's retirement, a school teacher's pension in Ohio. It all flows through one quiet empire, and the man who built it made a fortune not by taking your money, but by standing between you and it. 971. Wall Street is a private club. If you wanted to buy a stock, you paid a broker a fixed commission, a price fixed by the industry itself for over 180 years. It was, quite literally, a legal cartel. Then a young man named Charles Schwab looked at that cartel and asked a dangerous question. What if it were free-ish? On May 1st, 1975, a day the industry still calls May Day, the government abolished those fixed commissions. Everyone else panicked. Schwab sprinted. While old money brokers wined and dined clients, Schwab did the unthinkable. He cut prices to the bone, opened a phone line, and told ordinary people they could invest without a salesman whispering in their ear. He called it the discount brokerage. Wall Street called it heresy. He was democratizing money. That was the story. That was always the story. And like most good stories, it was true, right up until it wasn't. The empire exploded. Discount trading, then no-fee mutual funds. Then, decades later, the move that broke the industry's spine. Zero. Commission. Trading. In 2019, Schwab dropped trading fees to nothing. Every rival was forced to follow within days. It looked like the ultimate gift to the little guy. But pause on that. A company doesn't build a $10 trillion empire by giving things away. So ask the question they hope you never ask. If the trade is free, what's the product? Here's the machine underneath the magic. 3 gears, and each one has been dragged in front of regulators. Gear 1, the cash sweep. When your money sits uninvested in your account, Schwab quietly sweeps it into its own bank. There, it earns interest. For Schwab, you might get a fraction of a percent. They earn the spread on billions. It's legal. It's disclosed, somewhere in the fine print. And in 2024, it became the target of lawsuits arguing customers were shortchanged on their own idle cash. The empire runs, in part, on the money you forgot you had. Gear 2, payment for order flow. Your free trade isn't free. When you click buy, Schwab can route that order to a high-speed trading firm and get paid for sending it. Critics call it a hidden tax on every trade. The firms in the middle profit from the tiny gap between the price you get and the price you could have gotten. You're not the customer, you're the cargo. Gear 3 is where regulators stopped asking politely. Schwab launched a robo-advisor, an automated investing service, and marketed it with a magic word: free. No advisory fee. But the machine had a secret. It quietly parked a big slice of your money in cash swept back into Schwab's own bank, earning Schwab a spread. The Securities and Exchange Commission investigated, and in 2022, it concluded Schwab had misled investors about that cash drag, money sitting idle, earning you little while it worked for them. Schwab paid over $187 million to settle, and this wasn't the first time. Rewind to the last financial crisis. A Schwab fund called YieldPlus was sold to conservative investors as a safe, boring place to park cash. It was stuffed with mortgage-backed securities. When the crash came, it didn't wobble. It collapsed, taking hundreds of millions in investor savings with it. Regulators charged Schwab with misleading those investors. The company paid over $100 million to settle, and, as is the ritual on Wall Street, without admitting wrongdoing. Pay the fine. Deny the crime. Keep the empire. By 2023, the empire looked untouchable. Then a quieter danger surfaced, one born of its own success. All that swept cash had been invested in long-term bonds. When interest rates rocketed upward, those bonds sank in value, leaving Schwab sitting on enormous unrealized losses on paper. When a few regional banks failed that spring, investors turned and stared at Schwab. The stock plunged. Whispers of the next domino spread across trading floors. The empire held. It always seems to hold. But for a few weeks, the the machine that holds your money, looked mortal. So, what is Charles Schwab really? Not a villain in a cartoon. Something stranger. A man who genuinely opened the markets to millions, and, in doing so, built a machine so vast that the fine print became a fortune. Where free is the bait, where your idle cash is the harvest, where the fines are just the cost of doing business. $10 trillion flow through his empire. He never had to own it. He only had to stand in the doorway and take a little from everything that passed through. The most powerful people in finance don't hold the money, they hold the door.